And we are live. So this is part two of this video on helping lower enlisted slash officers out with military finance, getting you off on the right foot, putting you on the right path, putting the pieces to the puzzle together so that you can one day retire and maybe have a nest egg, have a lot of money waiting for you at the end. Also, if you plan on getting out within 4, 5, 6 years, you can also have a decent amount of money built up. This is for you, this is for your family, this is for your financial future. So take this video seriously. This is part two. Part one, I did it yesterday. However, there was a storm and it knocked the power out. Therefore, the Wi-Fi went out, and I was trying to get back online. It just wouldn't let me back online. YouTube was acting funny. So we're here with part two. I finished off last podcast episode. I was on to beginning to talk about the VA loan. So let me correct a few things that I had from yesterday. One of the things that it just slipped my mind. I cannot, for the life of me, remember the name of this course. But I said yesterday the course was called uh, Millionaire Military or something like that. No, the course that I recommend all junior enlisted, junior officers, anyone in the military take. It's a joint knowledge online course, a JKO course called $1,000,000 Sailor. It's going to take you about 14 hours to complete. That's what the cert says. However, it shouldn't take you 14 hours. But if it does take you 14 hours, I would really take that training seriously, because while it doesn't get into too advanced of topics such as what this channel talks about with credit cards, it does talk about everything that you need to know to be successful in the military in order to be able to retire with a lot of money. $1,000,000 Sailor. I'll tell you a quick story about $1,000,000 Sailor, actually. So I was in Hawaii and I was on Ford Island, and I was fairly new to Hawaii. I didn't really know how things work, didn't understand it. I still am somewhat new to the military, even though I've been in for a little bit. But I was on Ford Island, and I saw someone get out of a Tesla. And he didn't look too old, but he didn't look too young either. So he had time to develop the funds to be able to afford a Tesla. But I just went up to him and asked him, I said, "Hey, how'd you afford that Tesla?" This was years ago. And he said, "Take $1,000,000 Sailor." And from that point on, I just understood, okay, I have to take $1,000,000 Sailor. By the way, if you are joining me in the chat, can you hit the like button for me? That would help push this video out to the sailors, the airmen, the soldiers, the Marines that need this video. Thank you for that. So yeah, $1,000,000 Sailor, definitely important to take. I highly recommend it. That's a correction from yesterday. Another thing that I wanted to talk about is I mentioned a 5% matching for the TSP that the government does, or that the military is going to do. That's not quite true. What happens is you get matched up to 3% of your contributions, or if you contribute 3%, you get matched up to 3%. If you contribute more than 3%, like 4%, you get matched a half of a percent after 3%. So if you contribute 5%, you're only going to get a matching contribution of 4%, because they're going to do a half percent. Anything after 5%, and they're not matching anything after that. So at 10% of your contribution, you contributing 10%, you're only going to get a 4% matching from the government. Now, I don't know why they did it like this. It sounds like a way to take money away from you, but I want to say it used to be like that they would match the 5%, but they don't anymore. All right, so we're almost to the more advanced topics for credit cards. Right now, I have you investing in TSP. Okay, I told you about the C fund. The S fund is fine. However, it's more volatile. More volatile means that it could have higher returns than the C fund, but you don't want to put your future on the volatility of something like the S fund. The S fund stands for like mid cap stocks. Mid cap stocks are stocks outside of the S&P 500 that could one day be in the S&P 500, but these stocks are less reliable than the S&P 500, which is the 500 biggest companies in the United States. The United States economy does pretty well over time. You're going to get about a 10% return over time, 9-10% return, which is pretty good. Pretty good return on your money. That's why I recommend the C fund. The life cycle funds are decent. However, uh, they they change based on uh, how much time you have left with your thrift savings plan. I think a steady C fund, set it and forget it, is probably the right way to go because it also it prevents you from wondering about, oh, uh, what type of stocks are being purchased in my life cycle fund. You don't even have to worry about that. There's no mixture. It's just C fund. That's what I think. And also, to give you a better idea of why the C fund is so important, I read a book. The book should be somewhere up here on my bookshelf, but it's called Common Sense Investing, and it's by a guy named John C. Bogle. All right, most people who follow this guy, they're known as boggleheads or bogleheads. And he's the one that actually came up with the idea of index funds. Index funds track an index, and within that index, it are stocks. So the index that the C fund tracks is the S&P 500 index fund. You probably heard of this, and this fund has a return of about 10% year over year over time. So some years it's higher than that, some years it's a little bit lower than that. But over time, you're going to get that type of return on your money, which when used with compound interest, you're going to see that type of exponential growth with your money. So let's say for the first 10 years, your money grows like this at a steady rate. Then at like 11 years, you start to see this, and that dip gets even deeper, it gets even higher as the years goes on. That's just an example, but it's one of the ninth wonders of the world. Compound interest, basically interest over time, because the fund is going to pay you to invest because of the returns that you're getting on your money. Over time, it's going to build, and it's going to build year over year, which leads to exponential growth. If you remember exponents back in grade school, 3 squared is 9. Okay, not that much. But 3 cubed is 27, right? So exponential growth. All right, so hopefully that's pretty clear what exponential growth is. And also, if you are joining me, hit the like button for me. Really appreciate that. Trying to get this content out to as many of our service members as possible. I am active duty military, so my goal on this channel is to help you guys with all your military finance needs. All right, so we're still on thrift savings plan. C fund, set it and forget it. Hopefully, I've explained this to enough of a level. If you have any questions about that, throw them in the comment section. But we're going to move on to now. We're building your credit because we have you some beginner credit cards. We have you thinking about your credit score. You got your beginner credit cards. You're starting to build credit limits up. You start building these credit limits up, such as with a Navy Federal Gold Rewards or a Cash Rewards card, and you're going to get like a 25,000 credit limit, which is excellent. Most cards don't offer that. Navy Federal, they seem to offer that to most people. Okay. And if you don't get 25,000, you'll get something pretty close to that. My first ever Navy Federal credit card, they gave me 11,000, and I wasn't in the military yet. I was in the DEP program, which is the delayed entry program, which is the program that you get into when you are about to get into the military. I was in the DEP program, and I got a Cash Rewards or a Go Rewards credit card from Navy Federal, and they gave me $11,000 worth of credit limit. And so I've had that credit card ever since. But with building your credit starting from scratch, we're getting you easy credit cards, such as Navy Federal credit cards or the Discover It credit card, which I have a video on my channel. Feel free to check that video out. I highly recommend that card to civilians and military. It doesn't matter who you are. Get a Discover It cashback card. Pays you 5% rotating categories, 10% within the first year. Excuse me. It's just a really good card. All right. And um, you can also get American Express cards. I recommend getting an American Express Platinum card. Now, should you get that as your first credit card? That's debatable because I've heard stories of people getting that as their first credit card. Some people think that you need to actually get an American Express Blue Cash Everyday card first so that you can build rapport with American Express. That's not true. Listen, that is not true. My first ever American Express credit card was the American Express Platinum card, and a lot of people share that same story as well. So don't don't think too much about what card you need to get first within a family. American Express, pretty easy. Once you're in their ecosystem, there are no more hard inquiries, which I explained what hard inquiries were yesterday during that live stream. So go ahead and check that out. But we're building your credit score, okay? So building credit limits, we're building on-time payments. Now you probably need a car. All right. Unfortunately, interest rates are to a point where they're pretty high. And I would recommend if you decide to get a new car, cool. Hopefully you get as low of an interest rate as you can, but maybe buy a used car. All right, that's just a thought. I can't tell you what type of car to buy because sometimes buying a new car is actually a decent idea if you plan to keep that car for 10, 12, 15 years. It depends. Maybe your car is future proof. Maybe paying a little bit extra for your car helps with some safety features on a car. I don't know, but I think you should be cognizant of the interest rate that you're paying on a car and try not to get fleeced on a deal with a dealership. I recommend talking to, if you are junior enlisted, talking to your chief first. You can also consult with me, talking to your Divo, your division officer, your department chief. Talk to somebody senior to you that seems like they have a decent head on their shoulders. All right. It's not, maybe it doesn't make perfect sense to you what someone who has a good head on their shoulders looks like because not everybody in leadership positions are financially literate. However, you should be able to kind of figure out, get a mentor. That's one of the first things you need to do when you're junior. Have a mentor so that they can guide you through some of these steps. All right. So you're not going to get fleeced on a car if you use your mentorship, use your chain of command, have them, go to bat for you so you don't make stupid decisions. Stupid decisions include buying a car, 18% interest. Just because, the dealership said, oh, you didn't have a high enough credit score. Okay, we're going to go to a different dealership. How about that? There's plenty of dealerships around. So we got to get you. So let's recap. Credit cards, TSP. We got to get you a car. So one of the things that having a car does for you and actually paying for it over time is it establishes a credit line, which credit cards are revolving credit. Car loans are installment loans. All right. So you're going to have this open. Hopefully you close it soon because let's say your car is $30,000. You're generally not going to have $30,000 just burning a hole in your pocket. So you're going to finance it. Every time you make a payment, it's going to help your credit score. Eventually you will pay the car off and that account will be closed. It's fine. Okay. People think that, oh, you'll see a drop in your credit score when the account's closed. Sure. You'll see a small drop in your credit score, but the help that it did for your credit history is good enough. Okay. Because it added on-time payments. You had an account closed without it going into collections. You're doing fine. Okay. It's okay. You can pay off the loan early. Some people also value the peace of mind that comes with paying off a loan early. All right. So we have your TSP, we got credit cards. Now we have to get into more advanced credit cards. So after a little bit of time, maybe after 6 months, maybe a year, we need to start getting some credit cards that earn reward points. This is what I recommend. And yes, this is the financial part that I'm going to say this is the right way to do it. I don't think the right way to handle credit card reward points is to use them for statement credits. Don't I wouldn't pay your balances off with credit card reward points. I would use credit card reward points to help fund travel that you otherwise could not necessarily either have afforded or it would have been a hassle on your finances to be able to afford it. And what this does is it gives you something to look forward to because travel, experiencing life, experiencing all that the world has to offer makes life worth living. All right. So this is going to boost your morale. It's going to boost uh, your your need to earn more money in order to take nice trips, which is going to inevitably boost your confidence because your confidence is going to lead to competence at work and your work output is going to show, and that competence is going to lead to accomplishments and you're going to accomplish a lot more. You have things to look forward to. You're generally going to be better off having goals of travel. Let's say you put on a bucket list, you want to go to India, for instance. All right. Start putting the pieces together to get to India one day. Or let's think of something more realistic. All right. You want to go to uh, the, the Mediterranean Sea. You want to be off the coast of Greece. All right. You want to be in Mykonos in 2 years, chilling on the beach. All right. We need to start putting the pieces together to get you to Mykonos. All right. So the first credit card that I think that you should get once you moved into the uh, after the beginner credit cards, I think you should start with Chase. Here's why. Chase credit cards offer the best value for dollar and the best value for points on your money because through the Chase Sapphire Reserve, which is a credit card that I talk about a lot on this channel, you're going to be able to redeem those points for travel through the Chase Travel Portal at a rate of 1.5 cents per point. Here's an example. 50,000 Chase points. Chase points are called Ultimate Reward points. 50,000 of those are going to be equal to, let's say at 1 cent per point, 50,000 points is equal to about $500. Okay. In order to figure that out, you just take the decimal point at 1 cent per point, move the decimal point over twice, and you get 500. Okay. So that's the easy way to do that math. In the Chase Travel Portal, that 50,000 points is going to be worth $750 because the points are worth 50% more when redeemed for travel. This is why I think it's best to use the points for travel. Now, you can get better redemptions. There are like American Express, you earn membership award points and you're going to get, sometimes you're going to get decent redemptions, but you're not going to get to the level that you get with the Chase Travel Portal. I just got a credit card. It's called the Bank of America Premium Rewards Elite Credit Card. And they do a similar thing with their travel portal where your points are, when used for travel, your points are going to be worth 1.2 cents per point, which is good. Okay. Anything above 1 cent per point is fine with me. It's just Chase does it even better. By the way, if you're joining me, hit the like button. Trying to give content and value to military members. Thank you guys for serving. And let's continue with the video. So Chase Sapphire Reserve, that's the first card. Another reason is a little bit more advanced. Maybe the not the video for talking about the Chase 524 rule. I'll just mention it, and you can go through my other videos that talk about the Chase 524 rule. Chase has some of the best credit cards on the market. A lot of their cards are great. Okay, their United cards are great. Their Southwest cards are great. Their Hyatt cards, their ISG, their Freedom Unlimited, Freedom Flex, Chase Sapphire Reserve, Chase Sapphire Preferred, all those cards, Amazon Prime card, all those cards are pretty great, which I pretty much have all those cards, except for the Amazon Prime card. I pretty much have all those cards, but they limit you to only getting approved for credit cards with them if you've been approved for less than 5 credit cards total in the past 2 years. All right. So now with the credit card game, You're up against the clock. You're up against some requirements. And now I need you to be ahead of that and get the chase cards out of the way because they are the strictest. All right. So you got to think about this. You have to think about your time management skills in regards to using to going after the Chase credit cards because the Chase 524 rule is basically going to push your clock back for getting those Chase cards if you spent, you know, if you spent too much time getting American Express cards and then US Bank and then Capital One, if you've wasted uh, credit card accounts on those other issuers, then you are going to be left out of getting Chase cards, which is why I would rather you get the Chase cards first. Then you can go to the other issuers because they're less strict. Except US Bank. US Bank is pretty strict. But US Bank is not as strict as having the Chase 524 rule. And if you're joining me, please hit the like button for me on the way in. Thank you. Appreciate you trying to give value to the military here. Hopefully this video spreads to more military members. And so we need to get you to Chase cards first. Chase Sapphire Reserve, that's the first card that I think you should get. Once you build your credit score, by the time you get these beginner credit cards, should be at around 720, 730. You could be even pushing 740 or 750 by the time you've had credit going for 6 months. You got your beginner credit cards, you got a car loan, you're doing pretty well. You pay all your bills on time. That goes without saying. I'm not going to tell you to pay all your bills on time. It should just go without saying. You're pretty smart. Just pay your bills on time, okay? Because that counts towards your credit score. All right. So now another thing that we're doing when we get in these advanced credit cards, we're building your points balance up, but we're also building your credit limits up because a card like the Chase Sapphire Reserve, it comes with a $10,000 credit limit. That $10,000 credit limit, well, actually, $10,000 is what I have on all of my Chase Sapphire Reserves. Yes, I have multiple Chase Sapphire Reserves. These, by the way, are $550 annual fee cards that you, as an active duty military, get for free. So you don't have to pay the annual fee. Civilians do. So once you're off active duty, you will have to pay the annual fee. However, while you're active duty, you don't have to pay the annual fee. It's under the Military Lending Act. I talked about in the last video, Military Lending Act and the Servicemember Civil Relief Act, the SCRA, are two laws that banks and lenders, they honor, they kind of mandated to honor because it's the law, but they honor, and some banks, they honor it by waiving the annual fees on cards. MLA applies to credit acquired after active duty. SCRA applies to credit acquired prior to active duty. All right. So go back to yesterday's video if you want a little bit more explanation on MLA and SCRA, but that is how you're getting your annual fees waived. You used to get annual fees waived with American Express under the SCRA. Now you get your annual fees waived with pretty much all the issuers under the Military Lending Act. And it depends on the issuer. Okay, so Chase, Citi, American Express, US Bank, Bank of America, they're going to honor this. They're going to waive your annual fees. But a bank like, let's say, Barclays, they're not going to honor the Military Lending Act because they don't interpret it that way to waive your annual fees. I wish they did. It would be nice, okay, to have a nice Barclays. I think Barclays has the Aviator card. It would be nice to have that card, but they don't. All right, so we're getting you Chase cards. Chase Sapphire Reserve, one of the best travel cards that you can get. Getting the sign-up bonus for that. Sign-up bonus is getting bonus reward points for meeting a minimum spend requirement. Meet the minimum spend requirement within 90 days, within 3 months, so you can have that points total added to your balance. And then you're going to get more credit cards because while you're getting more credit cards, your credit history is still building. Okay. It's like something that you started and you don't really have to worry about it again. It's like a seed you plant that grows, and watering it is just you existing. That's how having credit cards works. Obviously, if you get enough credit cards, if you get a lot of credit cards like me. Eventually, you will have to put some spin on each of them, probably every year to keep them alive. But for the most part, people aren't going to have as many credit cards as I do. But if you decide to go that route, uh, you wanna you wanna make sure that those cards don't close on themselves, because if a bank issuer sees that you're not using your credit cards, they're gonna just close the account. But this only happens after maybe like a year, year and a half, sometimes 2 years. I try to make sure I put spin on my cards every 6 months, at least just put a little bit of spin, maybe put one purchase, pack of gum on the cards that I don't use, cards that uh, are useful for credit history, but not useful for like every day. Okay. So then after the Chase Sapphire Reserve, you want to start getting cards like the United Club, Visa Infinite card. Okay. So now you're putting reward points into airline cards. And then you want to get like hotel cards, Chase IHG card. So now you're putting reward points into hotel currency, and then the Hyatt card. So things like that. That's four cards right there. And then once you get back under Chase 524, you want to get things like the Southwest credit card. All right. And maybe an Aeroplan credit card. So we have a lot of different credit cards that you can get with Chase. Let's say you've gotten all your Chase cards that you could get up until this point. Let's say you got the three cards. You got three cards that you can get. You got a Chase Sapphire Reserve, United uh, Club, Visa Infinite credit card, and then you got, let's say you got the IHG card, which I think is a super good credit card to get. You get a lot of bonus points. You get a lot of IHG is one of the biggest hotel brands. IHG is International Hotel Group. They own all the Holiday Inns, all the Holiday Inn Expresses, um, all those types of hotels. Their footprint is massive, so you'll never go somewhere and there's not like an IHG hotel there. Uh, Hyatt, on the other hand, if you get the Hyatt card, Hyatt hotels aren't as prevalent as say IHG. Uh, Hold on, we have a comment. Do they warn you if the card account is going to be closed? So yes, they actually do warn you if the card account is going to be closed. I remember years ago, I had a card account that was about to be closed, but I didn't know any of this information. But they sent it to me. This was like some store card. If you get store cards, don't get store cards, by the way. But it was like a store card for Old Navy. And before I joined the military, I had this card, and they sent me notices letting me know, hey, we're going to close this account if you don't put some spin on it within the next 30 days. And I just didn't listen because I didn't care, because I'm not as smart as you are if you're watching this video. Um, by the way, like the video. And I had that account closed. Okay. So that is one of the negative repercussions of not knowing information like this. You're going to get accounts closed, which, you know, all you have to do is put a little bit of spin on it and pay it off. And then you have that account. That account helps your credit history. Credit history being good helps your credit score. Credit score continues to go up. This credit score is then going to be used to get even better credit cards, such as Chase Sapphire Reserve, United Club Visa Infinite credit card, IHG card, Hyatt card. And these hotel credit cards, these airline credit cards are going to give you free benefits. Yes. So we're going to be getting free nights from hotels. We're going to be getting free check bags, basically free flight certificates from some credit cards, like the Southwest credit card is going to give you a companion certificate. And these things are going to renew every year. So with Hyatt, you're going to get a certificate to stay at a Hyatt property category 4 or below every year. This is a $95 annual fee card that you don't have to pay for. However, they're giving you a free night at a property that costs about $500 to stay at per night. Think about that. That is a lot of money in your pocket for you doing nothing. All right. And then the IHG card, same thing. Now, the IHG hotels are not going to cost as much as the Hyatt hotels, but getting a free room for a room that will cost you about $350, that's pretty good. Okay, because then now we got to move over to American Express. We got to get you your American Express credit cards, like the Hilton Aspire credit card, which now we're moving into the territory where getting those credit cards, you're literally getting thousands of dollars worth of value for free. $450 annual fee cards, $550 annual fee cards. You're getting them for free. They're being waived by the Military Lending Act. And you're basically getting the sign up bonus, pocketing a bunch of points, and then you can go ahead and turn around and use that for aspirational stays in properties worth thousands of dollars per night. All right, thousands is a little bit of a stretch, but the Hilton Aspire card allows you to stay at any Hilton property, whereas the IG card, they cap you at around $350. And in the Hyatt card, they cap you at around a category 4 hotel, which is uh, could be upwards of $500. The Hilton card is going to not cap you. So you can stay at any property, which is why people would rather use their Hilton free night certificate on the best properties in the world, okay? Because that's what you're going to have to your disposal. And let's say you wanted to go to Mykonos because that's your aspirational stay. That's where you want to go. That's on your bucket list. First of all, now that you have these cards, every year you can go somewhere that's on your bucket list. So you would be able to stay at the best property there. This is what I'm saying. Uh, if you instill the discipline in order to get these things, get these credit cards, and then work towards goals of traveling, improving yourself, expanding your mind, expanding your horizon, accomplishing things, then that's going to be better uh, for you in the future as well. Because these things are only going to make you a better person. Plus, you're gaining valuable life skills by traveling, and you're becoming a better, more well-rounded individual anyway. And then we just use travel to make you work harder. So now we have you building confidence, accomplishing more, and you get to enjoy the fruits of your labor without being a millionaire. I stay at properties all the time where uh, my wife and I, we're it's like we're generally going to be the only black people uh, some places that we go, and it's a little weird, but that's just the way it is. It's not because we just go places that don't have black people. It's just the places that we go, black people just aren't at. I don't know why. I don't know why. We went to Lake Tahoe recently, and there wasn't many of us. All right, so uh, so we do things like that. We're going places very soon where the same dealio is, and um, yeah, people just don't do the things that we're able to do. So we're able to do things that other people can't. That's what I want you to use your credit card reward points to be able to do, not pay statement balances, not buy gift cards. You want to use these for travel. Okay, so now we're on to American Express. We got Hilton Aspire card. Basically, get a free night at any Hilton property in the world. And then you book a trip there, right? Because now we got to use the points that you earn from Chase to book your flight. So the points that you use are now worth 50% more. Okay. And these things kind of work in tandem because even when you spend those points to get that flight, you will be using those cards the entire year. And then you will be rebuilding the points balance on those cards because you're going to earn points for every dollar that you spend. By the way, hit the like button for me if you're getting value out of what I'm saying to you right now. Everything I'm saying to you right now is stuff that I've done, stuff that I've literally done. Within this country, the best Hilton properties to stay at are going to be Waldorf Astoria, Conrad, uh, those types of hotels. I've stayed at the Waldorf Astoria in Vegas before, and I can tell you the Waldorf Astoria is the nicest hotel on that strip. Don't let anyone tell you any different. Don't let anyone tell you the Cosmo is better or anyone tell you that the Aria is better. No, listen, the Waldorf Astoria is the best hotel on the strip, but people don't know that because people don't typically stay there. People go to the hotels that have the casinos in them. the Aria, the Cosmo. No. Anytime you go to Las Vegas, if you want to really enjoy some luxury stay at the Waldorf Astoria. I have videos on this YouTube channel. I have videos on Instagram. Follow me on Instagram at Ty600, TYSIXHUNNID, and you can see some travel videos from there. See a little bit of a travel vlog because that's one of the things that we like to do. Because I'm trying to show you what these free credit card points can give you, because that's what I like to do. I like to travel free. That's one of the reasons why I made this channel, to show you and to teach you how to travel for free. And then, as a byproduct of being able to travel for free, you're also doing things like building credit that can be used now outside of advanced credit cards. We're on to mortgage. We're at 35 minutes right now. Hopefully you're enjoying the content and you've hit the like button. So you've now gotten a few credit cards. You've now built up a decent credit limit. You've now built up a decent credit score. Now it's time for you to buy your first house or your first condo. You're going to use something called a VA loan. I have plenty of videos on the channel about VA loans, so please go through those. If this is going to get glossed over and I'm going to go through it too quickly, but basically what a VA loan is, it's a way for you to purchase a house or purchase property, purchase a condo, purchase an apartment without putting any money down. If you said this, explain this concept to your parents, they wouldn't understand it, especially if they're not military. They would get it. Sorry, I had a little dust right there. They wouldn't really understand it because if they've ever bought a house, they had to put 20% down or 3.5% down. They use an FHA loan, or they put maybe 10% down. Depends on the loan product, but 0% down, that doesn't exist outside of the military. It doesn't exist outside of being active duty military or a veteran of military service, because what the VA loan does, a little bit of an explanation. The Veterans Affairs loan is not issued by the government. It's issued by banks and lenders. However, the VA, the Veterans Affairs Office, they guarantee the loan, which means that if I get a VA loan out and I decide I'm going to default on it, I'm not going to pay the mortgage, the government guarantees that they will pay the lender. That's why the lender doesn't need to accept a cash money down. So it's good for the lender because you have trustworthy people uh, being like lending from you, but also it's good for you because you didn't have to come out of pocket. Now, when I say that this is a little unheard of outside the military, the only time that you will generally see something like this happen is if it's like an inner city, um, and like, for example, I volunteer for Habitat for Humanity, building houses, things like that. And one of their programs that they offer is when they build a house, they try to, what they want to do is they want to put people in that neighborhood in those houses, because they're going to be building houses in these underfunded communities. They want to put people in those neighborhoods, in those houses, and they need to incentivize people. So instead of moving out of the inner city Baltimore, they want to incentivize people to stay in the inner city Baltimore so that they can improve the community. They give you like a 0% loan. Basically, you don't have to pay any interest. It's crazy, but this is one of the things that they do. Now, the catch is that you have to live in there for like 10 years. So it's a little, it, it, I I can't see myself ever accepting anything like that because I'm in the military and I would never be somewhere for 10 years straight in order to be able to accept that. And I couldn't even like fraud my way into doing that because they wouldn't accept me as an applicant knowing that I have to move. So I can't even commit fraud. Jesus, I can't commit fraud. Okay, so get a VA loan. A VA loan through a bank like Bank of America. Don't get a VA loan through Bank of America. All right, that's not fair. Bank of America is a fine bank, but you want to get your VA loan through a bank that is offering you the best interest rate. All right, and the best terms. Okay, so generally you're going to have a 30-year fixed mortgage and you want to be like somewhere near the prime interest rate or below the prime interest rate uh, at the current time. Your credit score is going to determine where your interest rate is going to be. It's funny how that works. All right. Because we just spent time getting credit cards and getting these high end credit cards. So now you have Chase Sapphire Reserves, you have some Visa Infinite credit cards, you have maybe multiple Chase Sapphire Reserves at this point. You got some American Express Platinum cards, which after you get your first American Express Platinum card, they no longer do a hard pull. So now every Platinum card or every gold card that you get afterwards, every Hilton Aspire, every Marriott Bonvoy Brilliant that you get afterwards, you didn't even incur a hard pull. You didn't incur a hard inquiry. It did not dock your score. It just added to your credit limit, but it added a line of credit that's revolving onto your credit. So you get a little bit of a dock of a score, but then it goes up because of on-time payments. And this just keeps flowing. So that's why having a lot of credit cards doesn't actually negatively affect you. Sorry, I got an itch on my nose. And now we're at the point where now we're trying to build generational wealth for you and for your family. And this is how we do it. We purchase property. Property, they say 90% of millionaires in this country, in the United States, made their millions off of real estate. That's what they say. That's what the math says. I have a book up here. Where's Millionaire Next Door? It must be in my backpack. Okay, so I have a book called Millionaire Next Door. It's in my backpack. This book says the exact same thing. So you're basically using a 0% down payment in order to gain an asset worth hundreds of thousands of dollars. And all you have to do is have a decent credit score so you don't pay an exorbitant amount in interest, and it's yours. All right, so let's do that at your duty station. Hopefully, you're not stationed in Hawaii, because if you are, then it might be a little expensive to purchase in Hawaii. But maybe you're somewhere cheap. Maybe you're located in Kentucky and a house costs $150,000, a nice house. All right, we're going to use your VA loan. We're going to buy that property. And then what are we going to do after you get that VA loan, after you get that property, after you live in it until you PCS? You're going to get some orders, and those orders are going to send you elsewhere. Now you go from Kentucky, now you go to Texas. What do you do when you get to Texas? Before you get to Texas, you start planning to purchase another house. Purchasing another house, how are you going to do that? You already have a house. Well, you're going to rent that house out. You're going to find a property manager. You're going to rent that house out. You're going to have them take care of the tenants. And then your mortgage is going to get paid. But you're not going to be living, you're not going to be living in the property. Your mortgage is going to be continue to get paid. So your balance is going to go down. However, real estate does this historically. Real estate historically increases in value. So while you're paying the mortgage down, the equity is increasing because the house is now worth more. So this chunk of money in between here and here is getting bigger and bigger over time. This turns into a lot of money, and a lot of money goes into your pocket should you decide to use it on a refinance or a home equity line of credit or something different like that. Or if you decide to sell, you could sell the house. Don't recommend. You could sell the house. Everybody's going to be in a different space. But let's say you go from Kentucky to Texas. All right, you start preparing to purchase a house in Texas. All right, start early. Look at the landscape. Don't wait until you get there. Look at the landscape. See what's available as of now. Maybe you have to get in touch with a real estate agent to get an off-market deal or an on-market deal. It doesn't matter. You're going to be looking for the best deal for the time that you arrive so you can move into that house. Okay, that's one of the things that I've done. I've moved into houses as soon as I PCS. PCS means you transfer from one command to another. Usually going to be one geographical location to another. However, if you transfer within the same geographical location, you could still buy another house. You could still do this, but I'm talking about a normal PCS. You PCS, let's say to Texas, Months before you get there, you start putting the pieces together so that you can purchase another house. You will have VA loan entitlement left over. Now, is VA loan entitlement unlimited? It's not unlimited. However, you could purchase $1 million home if you could afford it. All right. There are plenty of stories of people purchasing duplexes and fourplexes for $1 million in, say, San Diego. Okay. And sometimes an officer, this is why I said in the beginning of the video, an officer is going to be able to do all of these things, TSP investing, getting houses like house hacking, are going to be able to do this much more quicker than someone enlisted. Oh, someone in the comment section asked, what determines the property tax? This is a great question. The property tax is going to be determined by the county. Can you tell me what made you ask that question? Because I actually haven't even mentioned property tax, but that's a really smart question to ask. What made you ask that question? I'm going to continue, but continue typing. Let me try to remember where I was. All right, we got your PCS in Texas. You're buying a new home and you're using some of your entitlement, right? So officers are going to be able to house hack a little quicker or a little bit better than someone enlisted because they make more money, right? And so you can still house hack as an enlisted. It's going to take a little bit more thought. You have to be a little bit more budget friendly when it comes to making these types of decisions. Now, when it comes to purchasing another house at a next duty station, you still have to keep in mind you have to remain under your VA loan entitlement. All right, certain counties have VA loan limits, and you have to stay under that. Otherwise, if you go over, then you got to pay a portion of a down payment. You have to come out of pocket, which is what I don't want you to do. I want you to basically use one of the tenets that I tried to teach you in last video, using other people's money. It's called OPM, other people's money. You want to be able to get wealthy and get rich off of other people's money. Who's the other people in this situation? The lender. All right. So you're using the bank's money instead of you renting an apartment. Let's say you rent an apartment, you pay $1,500 a month to the landlord. How about you buy a house, pay $1,000 a month mortgage, and you're paying yourself. Oh my gosh, this is crazy because you're paying yourself. How are you paying yourself? Yes, you're paying a little bit of interest toward the bank, but over time, you're paying yourself because you start to pocket that money. That money you pay to the bank, you pay that principal down like this. You paying the principal down. It goes from house worth one or house balance at 150, house balance at 145, house balance at 140, and then house value at 150, house value at 160, house value at 180. This money, you can use that because it's now yours. It's called equity. You use that equity. I can't tell you how to use equity, but I can tell you what is a very smart way to use equity. It could be very smart of you to use equity to purchase more properties. Now, I'm getting a little too advanced with that one. So let's continue on to your next duty station. All right, purchasing another property. Start early. Get your VA loan entitlement. Understand your VA loan entitlement, how much you're entitled to. This is something that you can look up because every county has a VA loan limit, which is like, for example, the county that I live in, I believe the VA loan limit is probably like 500,000. All right, but it also is going to depend on how much entitlement you have left because remember, you bought a house in Kentucky. Remember, this is our fake person that lives in Kentucky and the PCS in Texas. You bought a house in Kentucky, but you didn't sell the house. You kept the house so that VA loan is still out in your name. The only way to get it out of your name and to keep the property is to refinance it into a conventional loan or a different loan product. Now, that's a little bit too technical. So we're going to continue with the next house. And let's say you have entitlement left over. Great. What are we going to do when you PCS in 2, 3, 4 years? We're going to buy another house at the next duty station. Let's say you get stationed in Wyoming. Okay, now we go to Wyoming. Now we have 2 houses, and then we go to Wyoming and we buy a third house. You have more entitlement left. Cool. You buy another house. So now you have 3 houses. What is this? What is going on here? You basically did the same thing that you did in Kentucky. You did it in Texas. You left there, had another person move in and rent from you. Use a property manager so that they handle the tenant. They take care of your tenant because your tenant is kind of taking care of you. All right. So now we have you at 3 houses. All right. And then you can do this again and again and again. You're going to have to get a little bit creative as the numbers go up. Let me answer this comment. I asked about property tax because I was thinking about what other costs you can take on purchasing a property. There's a lot of other costs that you can take on. One of the videos that I did earlier this year, around April, I did an update on the VA loan funding fee. VA loan funding fee is a percentage that you pay for the ability to use the VA loan. So every mortgage has closing costs. Closing costs are going to be fees that you pay to the lender. They're going to be title fees, property fees, county fees, things like that. The VA loan is going to add this annoying little thing called a VA funding fee, which is going to be for your first loan, it's going to be like 2.15% of the whole loan amount. And then for your second loan, it's going to be like 2.3% of the whole loan amount. Now, the reason why I did a VA funding fee video a few months ago is because they changed the terms for the VA loan or the VA funding fee. They basically took 0.15, uh, they decreased it by 0.15. And what that does is it puts more money back into your pocket because it's less money that you have to pay to use the VA loan. So, and the reason why they have the VA funding fee is because you're getting such a good deal on the VA loan that the government is like, we kind of need to, they kind of need to come up off of something. We gotta get something out of them. But what I do is I lump my VA funding fees into the loan, into the closing costs, which you generally aren't even going to have to pay closing costs if you do it the way I do it, because I bought houses through lenders that cover closing costs. All right. So they cover enough of the closing costs, and I just lump the VA funding fee into the loan, and it's set it and forget it. Because what you want to do is use other people's money. You want to come out of pocket as little as possible that makes the most sense. So yeah, if you have to do an earnest money deposit is like when you are serious about buying a property, you put an earnest money deposit down that goes towards that property, goes towards your closing costs, so that they know that you're serious, so they know that you're not wasting their time. Yes, that's necessary, but so that like 1,000, 2,000, maybe a few $1,000s, that's necessary. But a VA loan funding fee, 2% of a $200,000 home is what's that? $4,000. All right. But that's only $200,000 home. On a $400,000 home, okay, so that turns into like 8,000, and with 2.15, okay, you're looking at around like 10,000. All right, so you want to use as little of your money as possible, as much of the government's money, the lender's money as possible in order to get ahead, because you want to use your money to enjoy your life, because you're thinking about the end in mind. You got to have that vision, the vision of, all right, you're chilling in Mykonos. Uh, and then also you've worked hard for your career. And at the end of that, you'll have all of these properties. You'll have all of these assets. You'll have all of the investments that you made in your thrift savings plan, also in your Roth IRA. If you choose to get that, not saying you have to get that, but if you choose to get a Roth IRA, you can also have that. Also, investing in the TSP, I recommend investing in the Roth TSP. The reason why it's Roth is because it's taxed up front. And this is part of the issue with this is part of the good thing about it being taxed up front. You will make more money in the future. So think about it. If you're taxed now on money that's going to be worth way more, think about it. It costs you less to buy it now than if you were to buy it in the future or be taxed on it in the future, then you're going to get taxed more, if that makes sense. All right. So it's like the difference between somebody being taxed on, they made $20,000 in a year. Let's say you're an employee. Okay. You're not self employed. You're not doing anything crazy. All right. You're an employee. You make $20,000 a year. Who pays more taxes? Somebody that makes $20,000 or somebody that makes 100 or makes $100,000? The person that makes $100,000, if they're an employee, they're going to be taxed more because you're taxed a percentage of your earnings. So let's say you are taxed on 20% or 22.5%, 22.5%. All right. You're going to pay more money in taxes. Okay. So making less money now, it is best to use a Roth. Now, let's say for some weird reason, you would make less money in the future, which is not very common. You would then, I would then recommend a traditional, but that's so uncommon to think that you're going to make less money in the future. So, Roth TSP, because you are going to make more money in the future, therefore, you want to be taxed at the rate now because it's going to be less overall. Hopefully, I made that make sense. It made sense in my head. If you have any questions, I'm all for it. Roth is what I put my money into. Perfect. I'm glad you put your money in the Roth. All right. So we were on to having multiple houses. Okay. You're basically your third duty station. You went from Kentucky to Texas to now you're in Wyoming. You have 3 houses now. Good. Keep doing this over and over and over again if you can. Now, can you stop at three? You can sure stop at three. You can retire and you can have 3 houses, and those houses, because you pay down the mortgage, they gain equity because the housing market, generally speaking, goes up, kind of like the stock market, kind of like the S&P 500, C fund. These things are still going to be going up in value, and you're going to be paying down these mortgages, which means you have this money here constantly building, and you're building them in multiples at a time. You can transfer some of this equity into other properties as well. There are special ways to do it. Follow me on this channel. Make sure you subscribe to the channel to learn how I personally do things like that, because it's not an easy thing to understand. It's not an easy thing to do, but it's doable, and it's something that I can teach you how to do. So we have multiple properties. We have multiple credit cards paying us to have the credit cards through free night certificates, through um, free hotel stays, through free benefits such as insurances like car uh, collision damage waivers, auto CDW. Like when you rent a car, when you go to one of these fancy places and you rent a car, you don't have to pay for insurance because your credit card covers you. Check bag fees. Generally, when you're in the military and you're flying, you're going to use your DoD ID number as your known traveler number, which is going to give you TSA pre-check, and they're going to give you. Um, you're not generally going to have to pay for check bags. Now, you could have to pay for check bags if you use carriers that don't really care about honoring military members. Because, like, if you fly United or Delta, they're not generally going to have you pay for bags if they think that you're traveling on orders. And this is what happens. The TSA staff, they're pretty hardcore when it comes to security. But when it comes to the checked bag area, these airline employees, they're less hardcore. Uh, when you input on the system, you input on the pad that you're active duty military, this is what happens. One of the employees comes over because uh, one of these triangle alert signs, these yellow triangle alert signs pops up, and you need someone to help you because they need to put their employee identification in so that they can make sure that you don't have to pay the baggage fees. What they do is it doesn't matter active duty on orders or active duty on leave. They are going to pick active duty on orders because they don't care. They generally are not going to care. And that's going to give you free check bags, like at least 5 free check bags. Now, if you travel more than check bags on vacation or something like that, then TS, like that's tough for you. But uh, 5 check bags is pretty good. Also, credit cards coming with free check bags if they don't do those special things where the employee just comes over to the kiosk and clicks the button that says military travel orders after you just show them your common access card, your CAT card. So you get all these benefits. Okay, you got houses, you got credit card benefits, you are doing well at your job, you're doing well in your career. Remember, you are elevating, you are moving forward, you have things to look forward to, you are continuing to build upon having a good credit score by gaining properties and gaining assets and gaining more money into your TSP. Allotments are building, your accounts are increasing in value. You got Roth RRAs, you got investment accounts. You're doing pretty well financially, right? Right? That's the name of the game. What happens at the end? At the end, you get to enjoy the fact that you have houses that are paid off, and all that you have to worry about is the rental income coming in. And then you can almost, at a certain point, if you do this well enough, you can early retire. Not early retire from service, but you can early retire enough because you're making enough money, enough residual income, rental income, TSP income. And yes, the reason why that course on JKO is called $1 Million Sailor is because you can easily, if you do this right, become a millionaire in the military. Um, you would just have to be disciplined and stay true to the plan. We're giving you, I'm giving you advice on obtaining credit cards. They give you free benefits. I easily make thousands of dollars a year just off credit cards alone, easily. And that's what I teach you on this channel. So that's what I recommend you do. I recommend you subscribe to this channel and like the video first. All right. Don't not like the video. That's rude. All right. Subscribe to the channel so I can help guide you onto the best credit cards. And then using your VA loan, maybe you need to refinance a loan. Okay. I have a video on the interest rate reduction refinance loan, which is a VA loan product that I've used to decrease my interest rate and um, gaining properties, getting involved in the TSP. I have investing videos, so I'm not just involved in TSP. I'm also involved in my Charles Schwab brokerage account. I'm also involved in my Fidelity brokerage account. All right, so I have all these different asset classes being built up, and this is a military finance topic podcast episode, but I would be remiss if I didn't tell you that even while doing all of this passive investing and active investing to an extent, you still need to be building a business. Sorry to tell you, but it's not enough for you to just be in the military and doing your job. You need to be so good. You need to be building in your 20s. You need to be building, putting pieces to the puzzle, putting pieces together that set you up for financial freedom later on in life. And one of those big pieces is building businesses. And how do you build businesses? OPM, using other people's money. All right. So you use the bank's money to get loans to build a business. Now, you can build a business using your own money first because at a certain point, you have to be responsible for your own success with this business. However, if you want to expand said business, you need to use OPM, other people's money, the bank's money, to help you fund it so you can grow and scale quicker. I personally have a really good plan for this, but I also am involved business wise as well because that's like you're on this channel. You're part of my business at as we speak. This is one of the businesses that I run. This YouTube channel, all right, and then I run other side businesses. Okay, so that's how also how I make money outside of the military. I run other side businesses outside of the military, outside of my military income. So aside from being a landlord, aside from getting paid from stocks and TSP and things like that, you want to run other plays financially that are going to set you up for success later on. And don't be discouraged when things don't happen immediately. Okay. You're not supposed to be rich in your 20s. You're not supposed to be wealthy in your 20s. You're supposed to be putting the pieces together in order to do things like that. Uh, One of the things that makes me feel wealthy or makes me feel rich is the ability to be able to travel to these places that we would otherwise not be able to travel. Not that we would otherwise not be able to travel, but we would just have to do it at such an obscene cost that it would be costing us our financial future. However, now we are able to travel places and it doesn't cost us our financial future. In fact, it is despite having a bright financial future, we are still able to do these things. And that's what I want for you. I want lower enlisted junior officers. I want you guys to pay attention to a podcast episode like this because this is where the real value is going to come in. I do videos on the best credit cards. I help you with mortgages. I help you get better credit scores. So let's bring it full circle. You start with beginner credit cards, and then you got a loan for a car. You need a car. You need a way to get around. Okay. Now you're building up your credit. All right. Now we need to get you some better credit cards. All right. Also, we need to get you investing in your TSP. Okay. At least get you the 5% matching. Now, they don't match you 5%. They match you 4% after 5% because they match you up until 3% and then 0.5% anything over 3%. Every percentage point over 3%. So 4% is 3.5% matching, 5% it's 4% matching, and then even if you're at 10%, it's only 4% matching. So the government matching is OPM, other people's money. We're using other people's money to help fund our success. Okay, so a recommendation for how much you should put, I recommend, at a low end, I think you should be doing 10%. But I also don't think you should be doing 50%. I think you should at least have some money to be able to, because you still need money to be able to fund these real estate ventures, right? You can't just not have money waiting for you. You have to be able to fund life and fund military, your real estate ventures. So not 50%, but 10%. Don't do anything less than 10%. Because you still want, at the end of the day, at the end of the time, when you're in your 40s or your 50s, you want to be a millionaire due to the TSP or TSP alone. And that's not even counting real estate or the businesses that you're building. Now, we got your credit score. Okay, we got you in TSP. We have you with decent credit cards. You now have Chase Sapphire Reserves, Hilton Aspires, Marriott Bonvoy Brilliance, American Express Platinum Cards, Bank of America Premium Rewards Elite Credit Cards, U.S. Bank Altitude Reserve Credit Cards, Citibank A Advantage Executive World Elite Mastercards. Man, we got you on this channel. Hit the like button for me. Thank you. Okay. Colt says he does 20% for TSP. Excellent. All right. Excellent. Especially when you're at a point where you don't have other people to worry about, you don't have family to worry about. You definitely want to be contributing as much as you can. Now, also, don't sacrifice too much money toward TSP that could go towards building your wealth outside of TSP. I know that's a little bit of a mouthful, but just want to make sure that you're tracking that it is okay to put as much money as you can towards TSP, but don't do it at the expense of not being able to do anything else like real estate. All right. Just wanted to make that clear. I like the TSP. I just think that real estate is going to give you a better return at the end of the day anyway. So you want to go with the asset class that's going to give you the better return, generally speaking. And that's also why some people don't even invest in the TSP at all. They just do all real estate. So instead of having an allotment of 20% or 15% or 10% out of their paycheck, they just allot that money to trying to fund real estate ventures, and it works for them. And I can't tell you what to do, but I can tell you that that works for some people. Also, doing both can work. It's going to just depend on you. Which camp do I fall under? I like having both options open. But If I had to absolutely pick one, I would pick real estate. I would pick real estate, but I want you to be well versed. That's why we've put pieces together in your 20s so that you can build different avenues. Remember, we have credit cards paying us residually because we get them for free. MLA, Military Lending Act, paying us residually. We have real estate paying us residually because we have people renting out the places that we used to live in because we moved to a different area. So now we're making money off of that because we're increasing equity in our home because the principal balance is going down because the rent is getting paid and we're paying the mortgage using that rent payment, and the property value is increasing anyway. So we're gaining that. And then we have multiple of those because we have more than one house. And so we keep doing that. And then we also have Roth IRAs outside of even CSP. So we have money coming in from that area. And then we have businesses that we're trying to build. So we have money coming in from that area. And then you're also still in the military. Maybe you deploy. Maybe you make a little bit extra money. Maybe you use STAP. I forget what STAP is. It's like you get like paid extra money sometimes when you deploy. And when you save, I forget what STOP is, but it's basically like this cool way to make more money while on deployment in the military. But you get all these things. You get reenlistment bonuses. Remember that. So you're getting all these things. Different areas. We are diversified. That's the word we're looking for. We're diversified in so many different asset classes. If one crashes, if real estate crashes, we still got CSP. We still got Roth IRA. We still got our businesses. We still got the military. If someone took the TSP away from us for some reason, we still got real estate. Like, we're so diversified, and this is the reason why I think the C fund for the TSP works so well, is because it's diversification. It works on diversifying assets because you're not just investing in one stock. You're not just investing in Apple stock. You're not just investing in Alphabet, Google. You are invested in all the 500 biggest companies in the United States, and they typically, historically, have done pretty well. So the diversification that we've instilled into your financial future, understanding interest rates, understanding finances, understanding credit scores, understanding use of credit cards, understanding having a lot of credit cards is not that bad, understanding that having mortgages is going to help you at the end of the day. You may not be able to see it now, but think about it in 20 years when that balance is paid down by 50,000, or that balance is paid down by 100,000, because that money still goes to you, and that property value increases by 100,000. Now you have 200,000, and that's just from existing. Because after you put the initial work into getting that property, now you just exist and you have people paying you in order to live there because you're offering them a service. The government is also going to pay you in the form of taxes. You get tax advantages for being a business owner. You get tax advantages for being a real estate investor. Now, yeah, I completely forgot to mention the tax advantages. So you're also going to be paying less taxes overall because you started businesses. You have income coming in from investments. These asset classes, is Roth IRA a separate retirement fund? Yes, a Roth IRA is going to be a separate retirement fund. You're going to do a Roth IRA, or I can't tell you to do it. You can do a Roth IRA through a different brokerage account. You're not going to do it through the TSP. TSP is going to be a Roth. It's like a 401k, but the Roth IRA is an individual retirement account. It's just separate from the military. It's separate from TSP. It's so that you have money that you can control. There is a cap on Roth IRAs, right? So in the military, one of the good things about the Roth TSP is that your cap is actually 18,000, which is a lot. Most Roth IRAs out in the wild are going to be capped at about $6,000 per month or per year, which is fine. But this is also another way to ensure your retirement. Is it overkill to do a Roth IRA? No, it's not overkill. It's overkill if you contribute so much that you can't invest in your other asset classes. Yeah, So obviously, we haven't talked about budgeting on this podcast as of yet. However, if you feel like you're overexposed to the market in terms of diversification and you just need to scale back, then I would scale back. And nothing, and nobody's telling you that you couldn't stop an allotment if you needed the money for a month or two or for a few months for a Roth IRA. No one's saying that. I'm just saying that that is a really good idea, a really good way to ensure that you get tax advantage when you are making the least amount of money that you'll ever make, because you will only make more money, generally speaking, when you get older. All right. So you're making the least amount of money in your early 20s or in your 20s. As you get in your 30s, your 40s, you're going to be making way more money. You want that money to be taxed now instead of later on. All right. And some of this knowledge, it might sound a little redundant, but it's stuff that most people actually don't know. All right. Even people that are fairly wealthy, people that have a lot of money, make a lot of money, hundreds of thousands of dollars per year. Okay, 150, 200, 250, quarter million. Like people make that this kind of money, they still don't know this information. And how do I know this? Because I've been exposed to people like this who I've been explaining this to, and I'm like, you're way richer than me, and you are now focusing on this um, when you're 55, when you're in your 50s. If you had focused on this at the age that we're trying to get you to start focusing on it, then you would be much better off. But hey, thanks for the explanation and tips. Have a great night. All right, you as well. So to finish off all the asset classes that we have you in, um, we just have you diversified, and this is going to set you up for when you get to the future. When you get in your 40s, you're going to be able to use the money, the equity made. Maybe you pay off your house. Maybe pay it off a little bit early. Don't recommend paying it off early just for the sake of paying it off early. Maybe you just want the peace of mind. Cool. Maybe you pay off your house early. Okay. Well, now whatever the mortgage was, now that rent, you just make that rent every month. You just make that 1,500 a month. You just make that 2,000 a month. That's residual income. Okay. Most people do not have it like that. All right. It is very difficult to retire in this day and age. What do you think it's going to be like to retire 20, 50 years from now? It's going to be incredibly difficult. You walk into Walmart, you see the Walmart greeter, you think the Walmart greeter wishes they were there, wish they were just retired. Okay. You need to be setting yourself up for a way to be able to retire at a later age. And we're doing that now. We have to sacrifice a little bit. I'm not telling you not to enjoy life. Is like the opposite. Some people can tell you, "Hey, you need to budget. You need to, do everything you can to uh, put money towards retirement." I'm telling you to literally let the military benefits that you get from credit cards fund extravagant travel so that you can enjoy life, enjoy the fruits of your labor, and be able to stay at some of the best properties and fly pretty well. Fly first class if you want to. I've flown first class for the first time this year. Uh, Worth it. It was worth it for that trip, but that's just because I'm a little bit smarter about allocating points towards award flight bookings, which is a little complicated. But just know that I typically try to fly economy because that's where the value is. But if the value proves to be so good for a first class flight that it's equivalent or a little bit better than flying economy, then I would fly first class. So hopefully I've helped you guys map out a financial roadmap for yourselves to get into real estate, to get into TSP investing. Make sure you are cognizant of all of this. Make sure you follow the channel. Follow me on Instagram at Ty600, TYSIXHUNNID. And you can follow me. You can ask me questions. You can DM me. And if you need any help of being successful in the military, I'm also here for that. I try to help all my people become super duper successful in the military because when I make someone else successful, that makes me successful. I believe as leaders, we need to be taking care of our people, and so that's just one of the things that I care about. That's one of the reasons why I get up and try to do what I do. Okay, so it's one reason why I'm doing this because I think we need to take care of our people, and part of taking care of our people is us as leaders becoming knowledgeable about these things like finances, things like being successful in the military, things like mapping out a roadmap um, for your financial future so that you and your family and your spouse and your children are better off uh, because we owe it to our service members who risk their lives for this country. So thank you for tuning in. Make sure you hit the like button on your way out, and we are out. Peace.